This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus service is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NBR.
Rally returns. The S&P closes in record territory. The Nasdaq is at a 13-year high, leaving many investors wondering if the stock market's rocky January start is in the rearview mirror. Union vote. Some Amazon workers vote today on whether to unionize. But could this small group have big repercussions for the company? And CEO of the Year, Morningstar's pick for the top chief executive is a turnaround expert whose stock has more than doubled over the past 2 years. And Tyler will introduce you to him. We have all that and more tonight on Nightly Business Report for Wednesday, January 15th. Good evening, everyone. Tyler will be along a little bit later in the program. Well, stocks are on a roll. Another triple-digit gain today for the Dow Blue Chips, and the S&P 500 and the Dow Transportation Index all rose to fresh all-time highs. And the Nasdaq closed at its highest level in more than 13 years. It looks like stocks have shaken off the stumbling start to the new year. They got a big lift this morning from Bank of America earnings. The bank's profits shot up eightfold from a year ago. Also helping, a big surprise boost in manufacturing and a World Bank forecast calling for a stronger growth outlook, not only for the U.S., but the global economy as well. On Wall Street today, the Dow jumped 108 points, the Nasdaq was up 31, and the S&P added 9 points. John Manley joins us now. He's Chief Equity Strategist at Wells Fargo Funds Management. So, John, is this really a turnaround? And if so, what happened? Why the change in sentiment?
I think it is a turnaround. I'm not sure it went down all that much when you consider, but I think what's happening is we're starting to get information. We're starting to get data on what's been going on, and the profit numbers are good, and I think that's going to be a theme throughout most of the year.
So, we've been hearing from many market strategists this year saying that fundamentals really count this year. So we got some good earnings news these past few days. If we continue to get good earnings news and some good economic news, what does that mean in terms of the outlook for the stock market this year?
It should be positive. I think the Federal Reserve is pretty much committed to not tightening for a while. They want to make absolutely sure the economy is coming back. They want a higher burden of proof than the market's going to require. I think that stocks will do well under that scenario, very, very well.
What do you mean by very well?
Well, we've had a target of 2,000 on the S&P for over a year and a half.
And we're really close to that number right now.
And I think that's a very good point, but I think that's an easy target. I mean, I think it's a number that was meant to be raised when we put it in place, and we may very well raise it as it goes on. You have very, very modest assumptions to get you there, and I think that we could probably exceed them. One of the things you have to think about when you look at a market going into the new year, if you get the sign right, if it's plus or minus, let the actual numbers work themselves out. I think the fact is that people should be buying stocks because there's profits to be made this year.
Well, this is a complicated and confusing time for many investors coming off of a fabulous 2013. What kinds of do's and don'ts should investors do with their portfolio and with their money?
Well, yeah, it's always, I think the proper thing is to ask yourself the right questions. And I think the first question is, do I own enough stocks? Do I own enough stock? Do I own enough exposure to the stock market to take care of myself and my family over a period of time? I think stocks are ultimately going to outperform. I think they may outperform this year. And then you have to ask yourself, is what's holding me back? What am I scared of? And is everyone else scared of that? Are these things that are already in the marketplace? And I think you can't look back. You have to look forward, and you have to accept what's on your plate. And I think what's on the plate is still very appetizing.
All right. And so in terms of more specific strategies, I mean, what kinds of stocks? Are we talking about big stocks, small stocks, U.S. stocks, non-U.S. stocks?
Well, I don't dislike any of them, but I think large stocks are still a pretty good place for individual investors to go. They're familiar names. We're more likely to buy into those things than trying to go down the road and look at smaller stocks. I think the U.S. is a great place to be. I actually think in some respects, Europe may be better at the margin. It's been a cheaper market, but it's been cheap for a reason. That reason's going away. I think the European economy is beginning to recover after having been in a real slump for a while. I think they have some control over their destiny. I think we can see everything you mentioned do well, but I'd probably favor big. And if I had to choose between the two, which I really wouldn't, I think Europe may outperform the U.S.
All right. So, and why do you say that? Why do you say?
I just think at the margin, the change in Europe could be greater. I mean, it's obviously when you go offshore, you're not as familiar, and maybe you need to get some assistance as far as picking the stocks and picking the areas. But I do think Europe is turning. It was a rather quaint recession in the sense it was old-fashioned. They chose to have it, and I think they've chosen not to have it anymore. Regardless, I think Europe's coming out of its funk. All
right. John, thanks a lot. Great information.
Thanks, Susie.
John Manley of Wells Fargo Funds Management. Payback time at Apple. The tech giant will refund more than $32 million to consumers, settling a complaint by the Federal Trade Commission that it charged parents for costly mobile apps that kids were buying without permission from their parents. FTC Chairman Edith Ramirez explained how the hidden charges added up.
The FTC alleges that Apple failed to tell parents that when they entered their Apple password, they were authorizing a charge for a virtual item to be used in the app, as well as opening a 15-minute window during which their child could make unlimited additional purchases without further action by the parent.
Apple will be also required to change its billing practices to make sure parents give the okay before getting charged for those in-app fees. Meanwhile, Apple is gearing up to hit it big in the world's largest smartphone market. Starting this Friday, Apple iPhones will be sold at China Mobile stores for the first time ever. Eunice Yoon sat down with the heads of both companies.
The chiefs of Apple and China Mobile are gearing up for a big day on Friday. That's a day when the iPhone will be available to Chinese customers at China Mobile stores.
It's a watershed day for Apple. It's a huge announcement.
Up till now, iPhones were only sold at its rivals, limiting Apple's market share. But after a long courtship, the tech titans sealed a deal last December. China Mobile will get phones that will encourage its customers to use its new high-speed data network. Apple will gain access to the Chinese company's vast network of more than 760 million subscribers.
I'm so honored to be doing business with Chairman Xi and China Mobile. They have the largest network. We're incredibly impressed with them. We have deep respect for them and have had from the very first discussion that we've had together. We see this as bringing the world's best smartphone to the very largest and now the fastest network in China.
Many analysts believe that Apple needed to broker a deal with China Mobile to compete further in this fast-growing handset market where low-cost smartphones are gaining ground. Tim Cook isn't concerned, and neither is China Mobile's chairman, Mr. Xi Guohua.
Mr. Xi, will you now use an iPhone?
Good question. Before China Mobile and Apple joined hands, I used a cell phone of another brand. Now, I've decided to switch to an iPhone. I'm very thankful to Tim Cook that this morning he gave me one of the first iPhones made for China Mobile. And it's gold, the most popular color amongst youngsters.
China Mobile's chairman said that the company already has millions of pre-orders, even though its pricing of the phones is slightly higher than the company's rivals. For Nightly Business Report, I'm Eunice Yoon in Beijing.
On Capitol Hill today, lawmakers took a big step toward passing a federal spending bill. The House overwhelmingly passed the more than $1 trillion bipartisan bill that will fund the government through the end of September. That bill will now go to the Senate, where it's expected to pass as soon as Thursday. The economic outlook is positive, and the U.S. economy continued to grow at a moderate pace. That's the message from the Federal Reserve's latest Beige Book survey of conditions around the nation over the past 6 weeks. Now, some regions reported a pickup in growth thanks to more consumer spending and a jump in factory activity. As we mentioned at the top of the program, U.S. factories have been pretty busy, especially in New York State. The Empire State Manufacturing Index rose to its highest level in nearly 2 years in the month of December. New orders, shipments, and even hiring all increased. Well, the White House is betting big on even more U.S. manufacturing. President Obama was in Raleigh, North Carolina today to announce a new public-private manufacturing hub to be developed there. The goal is to bring more research and tech jobs to the U.S.
We've made progress, and that's what I mean when I say this can be a breakthrough year for America. The pieces are all there to start bringing back more of the jobs that we've lost over the past decade. You know, a lot of companies around the world are starting to talk about bringing jobs back to the United States, bringing jobs back to places like North Carolina.
$70 million in federal funding has been earmarked for manufacturers in the Raleigh area to make high-powered computer chips. There could be some big changes coming to Amazon.com. For the first time ever in the U.S., a group of Amazon employees are voting to unionize. There's only 30 of them voting at an Amazon warehouse in Delaware, but those equipment maintenance and repair technicians could become the e-tailer's first labor union members. AFL-CIO head Richard Trumka says there are reasons why Amazon workers want to unionize.
A lot of it is about the rules that they do. They jerk people around on for vacation, don't let people have adequate vacations. They don't give them the adequate respect that they deserve. And so they wanted a union. Hopefully we'll get it for them. It'll be the beginning of organizing Amazon so that we can make it a stronger, better company.
Well, Amazon issued a statement about the vote. In part, it said median pay inside our fulfillment centers is 30% higher than that of people who work in traditional retail stores. Amazon also said the top priority of our fulfillment center network is safety. It's safer to work in the Amazon fulfillment network than in a department store. John Fort has been following the story and joins us now. It's a very fascinating story. So let's say they have the vote. How do you think that's all going to play out, and what does it mean for Amazon?
Well, it's really unclear, Susie. Both Amazon and the union has said they're not sure which way it's going to go. It comes down to about 30 workers. We're not sure which way they're going to vote. We'll get the results really late at night. But this is important because the union has said, based on this, they want to unionize the rest of the warehouse, not just those 30, but more than 1,000 other workers move on to the rest of Amazon's network. And this is a company that has grown gangbusters over the years, from just over 20,000 workers in 2008 to nearly 90,000 as of the end of 2012. We'll know how many they have now as of the end of this month.
So you heard the statement from Amazon sounding like, you know, we pay everybody well, we are a safe workplace. Why is it that these workers want to unionize? Is it wages? Is it something else?
Well, the union says it's really not so much about wages. It is about vacation. It is about flexibility on the job, about breaks, things like that. They want to have the ones who are pushing for this a little bit more of a cohesive voice.
All right, so, you know, Amazon is growing gangbusters. It's going into all these new areas. As it expands, is this union issue going to keep coming back?
You know, Susie, I really think it will, because they're moving into more traditional areas that are more traditionally unionized. We hear all this talk about the grocery business. We know they're expanding that in San Francisco and some other areas. You look at a company like Safeway that does grocery for a living, 80% of their workforce is union. But you look at Costco, closer to 10% of theirs is. Costco is known to treat its workers really well. It's got about, say, 15,000 Teamsters workers, and they tend to treat the rest of their non-union workers, cover them under some of the same bargaining rights that they negotiate with the union. So how Amazon acts from here, win or lose, is going to be really important to how much flexibility they have over their workforce going forward.
And it may set the tone for other retailers like Costco, Walmart, to follow.
It might. Unions have been trying to get more representation at Costco, but the workers, by and large, don't seem to want it.
I'm sure you're going to continue following this for us.
Absolutely.
Thanks so much, John, for coming with us. John Fort. Well, still ahead, two Dow components, Goldman Sachs and American Express, report earnings tomorrow. Why are some expecting one report to be stronger than the other? It's been a big week for bank earnings, and tomorrow we get two more, Dow components, Goldman Sachs and American Express. Mary Thompson has a preview of what to expect.
The fourth quarter expected to be an up one for profits at American Express, a down one for profits at Goldman Sachs. American Express's winning recipe mixing expense controls with steady spending by its affluent client base, according to analyst Daniel Furtado.
I think the three things that myself as well as most investors will be looking at are will be spend volumes, cost control, and credit performance on tomorrow's print.
Client spending seen rising 7 to 7.5% last quarter, with Amex seen delivering on its promise of capping expense growth at 3% last year. The net of these efforts expected to be a 12% rise in the company's fourth quarter profits once you account for charges Amex took in the same year-ago quarter. Revenue seen growing 5.5% to $8.6 billion.
Like American Express analyst Stephen Chubak says, a key to Goldman Sachs' fourth quarter results will be how the company handles expenses in the quarter, specifically compensation expenses.
We believe that there's still going to be more meaningful comp leverage in the fourth quarter, consistent with what we've seen historically.
Meaning the amount of money the investment bank puts aside to pay employees as a percentage of revenue will fall in the fourth quarter from the third. Cutting those expenses could be critical to Goldman meeting expectations for a 28% decline in fourth quarter profits. Behind the slide in net income, a lackluster performer by a unit generating 45% of Goldman's revenue. The business, known as FICC, trades bonds, currencies, and commodities. It was the firm's weak spot in the third quarter. Weakness Wall Street expects spilled over into the fourth. For Nightly Business Report, I'm Mary Thompson.
We begin tonight's market focus with a major restructuring announcement from JCPenney. After the market closed today, the struggling retailer said it'll cut around 2,000 jobs and close 33 underperforming stores. It's all in an effort to save about $65 million a year. Shares fell in after-hours trading. They were up 1% in the regular session to $7 a share. Big management news at Yahoo also after the bell today. The company's chief operating officer is leaving effective tomorrow. The news came out according to a filing with the Securities and Exchange Commission. Enrique de Castro gave no reason for his abrupt departure. He was brought in by CEO Marissa Mayer 2 years ago. Ahead of the news, shares fell slightly today to $41 and change. Aetna raised its full-year revenue outlook by $1 billion, saying that private Medicare sign-ups are better than expected. The insurer now expects revenue to come in at $54 billion. But Aetna's stock still fell a bit to $71.40. And CSX Corporation said its quarterly profits fell nearly 4%. The railroad operator blamed the miss on a sharp decline in coal hauling. That masked a jump in volume from strong shipments of chemicals, autos, and agricultural products. Shares dropped in after-hours trading, but they rose 1% in the regular session to $29.23. Well, the transportation sector is one of the indicators of economic and market growth. In fact, as we mentioned earlier, the Dow Transportation Index hit a new high today. Now, one rail that's had success is Canadian Pacific. And today, its chief executive, Hunter Harrison, was honored as CEO of the Year by investment research firm Morningstar. Our own Tyler Matheson sat down with Harrison in Chicago.
I guess my first question for you is, how's business?
Business is good. We just completed a pretty successful year that we'll be reporting in a week or so, and but business levels have been surprisingly good for us.
You know, in your business, the railroad business, you have a unique perch for judging the health of the overall economy. You do a lot of intermodal truck things, consumer products, you carry a lot of fertilizer, you carry a lot of coal, you carry a lot of oil. How is the economy doing, and how do you think it's going to fare in 2014 overall?
Well, some would argue that I'm not qualified to answer that question, but you know, I think I see more positives than negatives. I think if we get over this issue about crude, particularly in Canada and now in North Dakota, and I think given that we're about to move forward with consumer confidence, and I think that's going to just push us right over the top and get the economy rolling again. And I think there's some positive numbers coming out if you look at housing starts. If you look at some of the projected sales in the auto industry, and we're just, I think, right at the top of the hill. If we can just push that last little bit over, there's some momentum there that's
the little
ready to
engine
happen.
that could. You remember that story. You carry a lot of timber. You mentioned crude. There are a lot of people who are worried about the transportation of crude, particularly the heavy crudes from Bakken and the oil sands on the nation's rail structure. How worried should they be? And is the infrastructure, the cars, the tracks, which haven't been improved all that much over the years, is it up to the task from a safety standpoint?
Well, that's a big question. Number one, I think there's clearly, in my view, we have been kind of an outlier here with the industry. The 111 tank cars that you hear so much about, if I was calling the shots, would be stop tomorrow. Mm-hmm. They're not ready, they're not equipped for that commodity as I see it. They've been controversial for over 2 decades now, so number one, that needs to change. I think from a track infrastructure standpoint, much better than people give it credit for. And I think we're really looking beyond the toughest issue. And if you look and investigate a lot of these accidents, it comes down to human behavior. But that's not the politically correct thing to talk about, changing people's behavior. Mm-hmm. So we tend to fall back on, let's do some more regs. Well, if people don't live up with Reg 1, 2, and 3, what makes you think they're going to live up with 4, 5, and 6?
Mm-hmm.
So it's not a case of regulatory issues.
It's often human accountability. You came in, right? That's what
Absolutely.
You're saying. You came in the summer of 2012 as part of a turnaround team at your railroad,
right,
led by the activist investor Bill Ackman, who brought you in. It has been a remarkable turnaround. Last year, your stock was up 39%. 2012, it was up 58%. What is the toughest part about engineering a turnaround, and what has been the toughest part at your company, and where are you in that process? Are you in the 8th inning, the 5th inning, where?
Well, it's clearly a change in people's view, changing the culture. When an organization is not successful, and this company had kind of lost its way, and you got to get it back and turn it back in a different direction, it causes a lot of change that requires people to change. People resist change. So that's the biggest challenge that we've had. But at the same time, when you can make that happen, it's the biggest rewards for you. Now, where are we in the ball game? We're probably in the early innings. And that's why I see there's a lot of runway left.
What more do you have to do? You've cut workforce, you've cut locomotives, you've gotten rid of some train stock. What's left?
Well, there's more left in each one of those baskets. We're spending a lot of money on improving the infrastructure with sidings, longer sidings that can accommodate longer trains. Clearly now we're positioning ourselves that we can really take advantage of the service offering we've put together, so we can gain some market share, start to grow the business. That gets pretty exciting. So there's no one area that we're out of opportunities there. So a lot of runway ahead of us. People tend to think when a company has a run like we've had, well, it's over. That's what we fought with each turnaround. Well, what do they do next? Well, I've never been in a situation with one of these turnaround stories where we say, well, it's over, there's nothing else to do, let's just sit back and rest on our laurels. That's not the case.
Hunter Harrison, congratulations on a job well done and on your award as a CEO of the Year.
Thanks, great to be with you.
To find out how Morningstar chose its CEO of the Year, go to our website, nbr.com. And coming up on the program, as hackers attack, companies are spending big money to protect themselves. So which firms are positioned to cash in on the strong demand for security? That's next. The impact of that Target security breach is growing. Those 110 million debit and credit card customers who had their data and personal information stolen at Target may not be the only victims of the retailer's data breach. According to a press report, companies that help Target process payments could face millions of dollars in fines and costs related to the hack attack, including a slew of consumer lawsuits and penalties from payment networks like Visa and MasterCard. Well, Target's data breach has sparked a big demand from fellow retailers and other companies for greater security at their online networks. Josh Lipton takes a look at some little-known companies that are poised to make big gains by taking on hackers.
Hackers are making headlines. Massive credit card breaches at Target and Neiman Marcus have retailers on edge. The president of Saks is calling the Target hack attack a, quote, Air Force One emergency for the retail industry. And chief information officers are nervous. They're ready to spend more on cybersecurity. Morgan Stanley, in a new survey of CIOs, finds that network security is a high priority in 2014. CIOs expect an average of 8% growth in network security this year, versus 6% last year.
All these indicators point to a better.
Keith Weiss at Morgan Stanley says hackers can do a lot of damage by stealing everything from a company's intellectual property to its customers' personal information.
Cybersecurity in particular has been a top priority for CIOs for the past several years. The main reason is the threat environment out there is, one, getting worse, and two, quickly evolving, and that the threats are getting worse, and what those threats actually are is a changing dynamic. So CIOs are spending a lot of time trying to stay ahead of that threat environment.
The question for investors: which companies are best positioned to capitalize on this stronger demand for security? Weiss says one of his top picks is Fortinet. Given the stronger demand for security, he says Fortinet is going to get more business this year. Dan Ives of FBR is sticking with FireEye. He says FireEye will move higher as it takes share from Intel's McAfee, Symantec, Juniper, and Cisco over the next 18 months. Finally, Sanjit Singh of Wedbush is bullish on Infoblox, which offers a product that prevents malicious software from spreading through a company. Singh says Infoblox could get a boost when it's expected to announce new products in late February. The problem of hacking isn't going away, so these are potentially strong investments for the future as CIOs do their best to defend their companies. Josh Lipton, Nightly Business Report, Silicon Valley.
And that is Nightly Business Report for tonight. I'm Susie Garrett. Thanks for watching. Have a great evening, everyone, and we'll see you right back here tomorrow night.
Nightly Business Report has been brought to you in part by...
Founded by Jim Cramer, TheStreet.com is an independent source for stock market analysis. Cramer's Action Alerts Plus service is home to his multi-million-dollar portfolio. You can learn more at TheStreet.com/NVR.
I'm Susie Garrett with a Nightly Business Report news brief. Stocks rallied again today, sending the S&P 500 to a new record, and the Nasdaq closed at its highest level in more than 13 years. Stocks got a big lift from Bank of America earnings. Its quarterly profits shot up 8-fold from a year ago. Also helping, a surprise boost in manufacturing in New York and a World Bank forecast calling for a stronger growth outlook for the U.S. and the global economy this year. On Wall Street, the Dow added 108 points, the Nasdaq was up 31, and the S&P added 9 points. JCPenney will cut 2,000 jobs and close 33 underperforming stores around the country. And 30 warehouse workers in Delaware are voting on whether to unionize and become Amazon.com's first labor union members. Be sure to tune into Nightly Business Report right here on your public television station.